Hello, everyone. Are we live on YouTube? Hey, there it goes. Hey, hello, everyone. Welcome back. We're gonna get used to these multi videos and stuff. Suppose we're just having fun. Says the audio stream's current bit rate is lower than the recommended bit rate. Any idea what the heck that means? I guess. All right, so this is sort of our second part of this video that we're doing here on a holiday sort of special. Don't really need to talk it in too much. What I wanted to do though is I want to get into the habit probably like once a month. I did get the Rumble page up and running. I just wanted to see how it worked and whether it was a viable alternative. Everything is all set up there and running. Although unfortunately, if your video is longer than a certain time limit, the quality itself gets degraded. So I thought, for the record, especially considering it's the end of the year, today is a holiday. Maybe we try and do a weekly commodity trend survey review video with sort of referenceable chapters through the video for YouTube. And I think this should be a good sort of reference piece going forward. To that end, this video might be like an hour or two long. So got a lot of information to cover. If you do find some value in this information, we do have the super chat function working. So this should be a good reference piece for you going forward. It should be like a good overall picture. We should do this maybe like on a once a quarter basis, maybe once a month. I don't know, something along those lines. And I have to give a huge shout out to Chris, my right-hand man in the production of these videos. He's done an outstanding job, it's only through his sort of stick-with-itness here that we're even able to consider doing this. So on the site, we do have a widget. It is coming along, but the site is, of course, a work in progress. And because technology is so sensitive to things like API and the correct data feed, and of course, right at the moment, TRI, we're trying to leave this rocket chat nonsense and move to sort of a more, I think Discord is the chat we're moving towards, something along those lines. That's got our tech department, of course, very, very busy. So we will get to getting this polished up. And if anything, these videos should be sort of a good dovetail for the weekly commodity trend review. We do have a page that I put together on the dashboard that's sort of part of our subscription package that outlines what markets are flashing what I would consider bullish signs, what are flashing what I would consider bearish signs. Still is a work in progress. So it is very usable information. Purpose of today's video is I want to go through sort of the trading view. These are mostly stock market proxies. What we should see over time is, of course, this commodity market review that I'm going to do, and these proxies should be dovetailed together. So we'll see how that goes over time. But for the purposes of today and to get this project up and running on YouTube, we're going to just primarily work off of the commitments of traders data that's available on TradingView through their scripting language. And of course, we have some awesome site members who have put these scripts together and make it very easy for us to understand all this. As I said, this is going to be a fairly lengthy video. So sit back, relax if you do want to. My suggestion maybe is use this as a reference piece. We're just going to go through markets one after another. Maybe take a 5-minute break between sectors. You can see we've got to cover the currency sector. We have to cover the financial sector. We have to cover the equities markets. We have to cover the energy sector, the metals sector, the soft commodity sector, the grains or the hard foods sector, and then finally the meat sector. So we've got quite a bit to cover here today. And as I said, Chris, I could give you a heads up, a note. If we could put like little chapter references in this video, I think that way it'll make it easier if somebody wants to cross-reference. All right, what the hell does Beamish think is going to happen with the Swiss franc? Right, you should be able to zoom to that section fairly easily. So, all right. So, I'm not sure how far we are into the video here, but if maybe you could put the first chapter reference, intro, and now we'll jump into the currencies. Dun dun dun. I like to, I'm not going to teach you how to use the commitments of traders reports. Ironic enough, if you just watch this from beginning to end, you see the consistent message. You probably should be able to get an idea how this works, but this is a formal topic in our level 2 program, and it dovetails with the idea of understanding how the hedging industry works and teaching about the hedging and the history of the commodities markets trading in North America. So we cover this in great detail in the education program. Having said that, I'm going to just basically talk about what the messages are, not teach you how to use this. So first and foremost, always we want to start out with the hegemony, the big boy on the block. Of course, you got to look at the commodities contracts. You can't look at things like TradingView created indexes. That won't give you the data. You actually have to look at the commodities contract. So general message from the large institutions, of course, is that they have been long. The commercials have been short. Large institutions facilitate the trade for commercials. Commercials want to be on the wrong side of the market. So they are the hedgers. So it does look to me like the commercials are trying to put in some sort of W here, which should, to our purposes, indicate that, they were short, so they were thinking down. They were short, so they were thinking up. Let's make sure we get that correct. Commercials pointing down means that they are bullish of price. And then notice they started to sort of turn their behavioral pattern here since basically the end of the summer. We are pointing up, and the large institutions basically facilitate the trade for the commercials. So that means large institutions are by definition forced to take the right side of the trade. And you can see through this whole bull market, they did very well. They're starting to ham out. This is a bit of a V top and V bottom, unlike the commercials. The US, the large institutions put in a V top. So this actually tells me that probably a lot of this business up top here was them actually doing business with the public. And of course, the public, they're shorting up here, and the large institutions are buying the public shorts. And of course, look at what happened, right? Anyway, large institutions taking positions off, commercials taking the shorts off. This to me says that position squaring. Technically speaking, position squaring, you should see the market come back to some sort of mean, and 50% rules work really well for that. Also, too, this is a play against these old highs. So we're just doing nothing more than good old Benkoff checks. Any longtime viewers of TRI and the Wednesday show. There was a gentleman who was watching the previous video. If you're still watching, he said if we haven't made reference to the Litecoin, or a lot of the people in the public haven't made reference to the Litecoin halving event, and actually Ben has been covering that very closely. So keep an eye out on the Wednesday shows for Ben's commentary on the Litecoin halving event. And frankly speaking, I agree with you the Litecoin halving event's probably the very first sort of indication of the bottom coming into the crypto space. Anyway. Okay, so US dollar, still what I would consider what they call position squaring. And that means, market is coming back to sort of the mean 50% rules. And really, if this thing M's out and actually starts to go negative and the trend starts to actually head down for large institutions and the commercials start to W out and start to actually head net positive, then that means that's when we should actually look for a strongly trending down market. Usually what ends up happening here is we've got to check the mean, right? So check the mean. That means, coming back to sort of, normal, or not normal is not the right number or word. Natural balance points probably is the better expression. Just price wise, it sure looks to me like that's some sort of top end of the range and that's some sort of bottom end of the range. So we're probably going to sit here and do something like that for the next while. As this sort of do we W out and the large institutions go back on the long side and this M's out and the commercials are back to shorting, which means they're expecting the market to go up. Or conversely, do we come back to the mean and then break down and back to the mean and then break out? And in that case, then I would expect that to head lower. So, if anything, looking at this US dollar, has been one hell of a move. This would probably be predicated on whether the inflation data really has topped out or not. So only time will tell. Moving on to the euro, you can see how we did have a check of the mean. This is kind of what's supposed to happen. And if anything, probably a good example of what the US dollar index will have to do. And then whatever the resolution, in this case, it sure looks like we got a big W there for the large institutions. And a big M for the commercials. The break through that level there for the commercials, and the break through that level for the large institutions. This should be bullish of price, bullish of price. So if we look at the market, notice that was that level right there, about the same time. And if we put a horizontal or vertical line on there, that was basically foreshadowing that rally. It's not a bad reference point. As long as this keeps making higher highs and higher lows, then the bulls got the ball. One thing I would say is we are coming up against another Wyckoff check level, Benkoff check. 50% retracement we saw on the US dollar index, probably going to see somewhat similar level here on the euro. I can get this tool to draw quickly. I just won't go there. Anyway, there. I might even go there. And 50%. Yeah, what a surprise. So we're coming into some sort of extreme. I would imagine at this level, that's when we want to start seeing if we're Wing out here, then expect this trend to continue. If, however, we're going to M out here, then you'd expect this thing to break back down. And conversely, from the commercials, exact same logic, just backwards. So if this W's out, then we should expect, and then in price, commercials are always the exact opposite. So we need to see that scenario. Conversely, if the commercials keep heading lower, then we should expect that to keep heading higher. So as it is, interestingly enough, Euro's actually caught a bit of a bid, and I think this is on the fact that the Europeans finally started to actually, quote unquote, normalize interest rates. They were way behind the curve. They just weren't raising rates. The economic situation in Europe was so bad. But the inflation problem now has gotten to the point where they just can't ignore it. They have to raise rates. So I think probably the trade off of the bottom has played itself out. As I said there earlier, and one of the reasons why I like to use things like the 50% rule is that this is an excellent sort of mean, right? The market comes back to the mean. This would be a price objective for a lot of technicians. And my hunch here is once we get back to this point, then we start looking at what's the new structure going to form out of these guys. As it stands right now, they're just straight line push into that 50% level. So market's heading up for the euro. It's heading down for the US dollar. Keep in mind, euro is about 35% of the US dollar index. So obviously, whatever the hell the euro is doing in the euro basket is probably going to be a huge influence on the US dollar index, just going the other direction. So Swiss franc, what kind of message can we get out of here? It's interesting how we did sort of a symmetry study of this Swiss franc going back years. So asking, is this consolidation the same as this? And what's the end result? What's interesting about this is that if you look at Swiss franc is going to be a proxy on gold prices, especially now. They conveniently left the euro again. I mean, they come, they go, they come, they go. And now, so that means that it's even more than not a proxy on gold prices and, you know, Swiss banking and all that kind of talk. So I basically just took this price action right from there and just overlaid it. I mean, it's obviously, you know, the old adage is history never repeats itself, but it often rhymes. So I wouldn't say that this is repeating, but I would expect a similar price behavior. So if anything, it almost looks to me like we could even stretch this out a bit, right? And so it kind of looks like, oh, geez, that's a long way, something like that. And we'll see what happens. Only time will tell. But if we did stretch that out to something along those lines, you know, we're going through this counter trend rally period here now. The interesting thing from the commitments of traders, though, is, you know, if we were seeing the commercials trending higher in earnest, then we should see higher highs and higher lows. Let me preface that, or not preface, let's just back up. Let's try this again. We were expecting the market to head lower. We would see the commercials, higher highs and higher lows. Something happened here through this window that kind of disconnected that. So notice that through this window here now, the commercials have basically been sideways. And remember, large institutions, Goldman's, Merrill's, all that, they do nothing more than just facilitate the trade for the commercials. So in essence, you could make the argument that they're kind of just sitting in limbo. They can't figure out what they want to do. So it is interesting that when we went into sort of this phase, you know, through the commercials getting more and more bullish, that meant the Swiss franc was coming down. I think they got this right clearly. And probably the reason why this thing was tanking like this, because the large institutions were on the, well, yeah, they were on the sell side to a certain degree, but you can see the commercials really went crazy apeshit bullish there. Consolidation, then a further move higher in the commercials would to me imply that there was going to be some bearishness in this market. And then this event right here sort of caught, you can see the market tried to double bottom here. So commercials were getting more bullish. The big dump came, but then there was just no follow through buying. So we got a bit of a divergence through here. The fact that we made a new high here in the commercials on that low, then we made a lower high in the commercials on that low, that is a major divergence. And even now, we've again sort of made another new low, but the commercials have made a lower high here. So major divergence here. Something doesn't smell right. And the interesting thing about the gold market, and I don't know, I mean, I just, you know, sort of messed around with that. I suppose if we just leave it as it is, we should be expecting a fairly substantial rally here. Do we have to have one more pullback? I don't know. Is this bottom enough to form that bottom? I don't know. But you can see if we just did a pure time study comparison, the Swiss franc went absolutely nuts over there. And the interesting thing is like I said earlier, this is a proxy on gold prices. And it's a bit of a side conversation, but Brian, he sure loves to go off on his tangent. If we look at no, I put it in here recently. Here it is. What did I always believe that the stocks and the companies that are in a particular sector will lead the market. So if you're kind of asking, what's the Swiss franc going to do? We know that it's part of the euro sort of story, but we also know that they kind of left the euro and they kind of wanted to be on their own again, which means that they better have a whole bunch of gold in the bank to, defend their currency. So in essence, it becomes a proxy on what the hell gold prices are going to do. So if we're asking, what do we think is going to happen with the Swiss franc? What we're really asking is, what do we think about what gold price is going to do? And then you have to ask, okay, well, what do the gold companies think the gold price is going to do? And what I thought was interesting about this study is this is Newmont Mining, the biggest gold company in the world. Look at me. And if we go back and look at previous fear greed cycles, so this is the late 1970s and that big bull market in commodities. But interestingly enough, remember, gold is a lagging indicator. So ironically enough, you go and inflate the economy, oil prices went crazy, hyperinflation, Paul Volcker's war on inflation, blah, blah, blah. They, diluted the money supply, they pulled it off. Then, of course, they got a politician in Washington. Hey, deficits are fine. Go and spend lots of money. Trickle down economics, right? Voodoo economics, as George Bush Sr. would say. And of course, the inflation people are like, oh my God, this is going to be the end of the world. But of course, remember, this happens after the fact. So ironically enough, this happens. The public comes and buys all this story that it's hyperinflationary, and then the next 20, 30 years, the damn stock does nothing. That's so typical investing. So, if we look at Newmont after that event, look how long it didn't even get back to that high until just recently. So, there are dividends and stuff like that. So anyway, the point being that I think that we're in a very similar pattern like this here, coming out of the Volcker war on inflation, cranking interest rates up. They already printed all the new money, though. It was a total, it was all cooked. And Newmont went absolutely insane into sort of the mid to late 1980s. So in a weird sort of way, everybody's beat up by that Peter Schiff guy about him being so bullish about gold last decade. But unfortunately, he was just sort of like a decade too early in a weird sort of way. So you might find that the gold market actually does fairly well here going forward. I just don't know. Is this part of this cycle? Is that this? And then this pullback is here. So that means you are here now. And if that's the case, then our gold market should look something along these lines going forward. So I'll just sort of roughly do this. Boom, 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 kaboom! All right, something like that. So if we just take that and go copy, and I think that we're sort of right here, 81, 82, 2021, 2022, right? 40-year cycles, 1941, 1942, 80-year cycles, I guess to a certain degree, you could say 1961, 1962, Kennedy getting whacked, all that. Anyway, point of the matter here, if we take this and just copy it, and plunk it right over top of our current price chart. Hopefully this will work. I don't know, it might not. No, it puts it back here, right? Boo, yes, there it is over there. Right, we just take that, we will drag that over there. I mean, is this realistic? That's basically that same move, there to there. And you can see sort of my expectation here in the short term was a rally back to mountain man, then a pullback, then rally back up like that, and then kaboom, huge move up. Something along those lines. So that was basically that projected to there. Actually, it's interesting when you look at this. Remember, we said 61.8 there. Notice that this rally peak was to 61.8. So you could make the argument that we'll do 61.8, then we'll come back down here. Right, so you can do reload zone going the other way. Notice there's Chris's favorite fib, good old 78.6. So what that means is, I think we rally up into this 61.8. Then we cut, and then, you know, the economy is going to eventually break here under the strain of the Fed raising interest rates. Then we're going to come all the way back down to 78.6. And then we're going to get ready for the fireworks. But you can see that this is going to take years to develop. So, you know, there's a guy on the site, Cole, who's really warning us that 2027, the poop's going to hit the fan. I actually wouldn't be surprised that, you know, we do something like this, the Fed breaks the economy, all the economic data rolls over. So the inflation problem, everybody sort of thinks, okay, everything's poo-poo. Then all of a sudden, you know, we have to do another big round of quantitative easing, or they crank interest rates down to 0 or something like that. And we go through all this crap again. You know? So point here is in the very short term, I think we're in the phase of these gold stocks. We're right here right now. I think we're in the phase of the gold stocks actually moving up. So this favors the idea of the Swiss franc moving up. So where are we right now? We're 47.89. I still think that, like Newmont here, it could move up 40%. 40%. I mean, you know, if you get over the next, you know, year or two, you get a nice 30-40% rally in the gold price through the calendar year 23 into 24. You know that Peter Schiff guy, man, you are going to hear it out the butt from that guy. And interesting too, I don't know whether you can see this or not, and we don't have that many people on the YouTube page anymore. And actually you can see I've already drawn it here. What's the statistical probability that this level right here has to be traded to? And if you've listened to me long enough, you should actually understand what this question really is. Right there. Hi, Nick. Hi, Cotter. Anyway, we all know what the statistical probability is that we trade back to this level. So, in a weird sort of way, I kind of think that this is our future here. This is a pretty important event here. Hi. Anyway, longtime site user is saying hello. Hope the chickens are doing okay. I heard that it's not the friendliest chicken weather out there right now. Anyway, so there's a fun little tangent that took probably like, what, 5, 10, 15 minutes just to try and explain what I think the backdrop for the gold market is. And so this kind of explains what I could see happen here in this Swiss franc as we get that 30-40% rally in the gold price. You could very easily see this spike higher here in the Swiss franc. And as I had said there earlier, I was a bit surprised, but you can see there is a noticeable divergence here in what the commercials are doing. Now, maybe this changes, and right now I might even argue that this low, is this low lower? That is 16, then oh, there's a low one. 12, what the hell did that say? 1298. And this low here, 13. Yeah, so that is lower. So you could argue that this is actually working away here. You would like to see the floor fall out of this. And if that's the case, then I think you got a green light for the gold market to do well here. This is the Swiss franc. So try and remember this when we eventually get to the gold market. I think you can see, maybe it would be better if we actually looked at the large institutions. So it's easier for you to see this. This low here is 19,379, 17,584 right there. So oh yeah, okay, this makes sense. Yeah, it's the bigger number. So 19, oh, there's 20. So that's the lowest low there. Come on, you 2648. And this low here is 24.5. So that is a higher low. And this is actually confirmed right there. So technically that is a W. Now remember, large institutions, they actually want to, they are forced to make money because the commercials need to be on the wrong side of the market. So there's actually a relative case. I mean, unfortunately, the trade itself just looks like gobbledygook. Higher highs and higher lows. I'm a bull. No, not flush all those people out. Poor people. Huge, almost like doji hammers. Massive rally, and this I think was around the time when the Europeans started raising interest rates again. I think that caught the market off guard a little bit. Ran a whole bunch of liquidity, and now this should turn into an ABCD, which takes us up into here. So maybe on the daily charts you might be looking for bot setups, but it looks like that's already played itself out quite a bit. So no real trade there, and if anything, this data here is actually suggesting, for the time being, that we want to be hunting long ideas. If anything, probably the trade is nothing more than a W on the other side of this trend line. So not there, not there, don't go 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 there. Ah, interesting. Look how we broke through, and then any kind of bullish consolidation through that. Like I said, that's a bull flag. That's a bullish bot setup. If you go down to lower time frames, oh, look at that. There's market structure. So you can even see if we drill down to like the daily chart, there to there, and there to there, and bot setup. Oh, what a coincidence. We did 33%. So then we go there to there, and we go to there to there, and we go there to there, and then we put on some underwear, and hey, look at that. We got a trade. So we can drag this down to, where's that lowest low? Oh yeah, it's right there. So right there, did 33. Can you see how this stuff sort of writes itself? It's sort of remarkable. So that's just a nice simple A to B. And then you just clone that, C to D. And look how the market actually set the trade up right off that darn level. I mean, look at that W. It's right there. Bang, bang, bang. And I change that to a clothesline. You go, gee whiz, this looks like it was manufactured right off of that level. So there's your trade. If you're looking like, why is the Swiss franc moving up? Well, it's because it's got one of those damn famous bullish bot setups working. That's why. Anyway, anybody who did take this trade, now you want to move your stop to scratch, basically on the tag of 108.30. I have these numbers correctly. Keep in mind, this is a spot contract. If you were really trading this, you'd want to drill down to the individual futures contract and really have the numbers all crisp. I'm not going to do that for the purpose of this video. We just want to sort of identify what the sort of overall trend is. So looking at the daily charts, I think we can clearly see this is a bullish bot. Target's up there at 112.65. So if I was going to have a level to keep an eye on for some sort of reversal A, B, C, D, looking for a pullback, I think I would be looking up here. So there you go. Moving on. The British pound. Now, the one thing I will say about this surprised me a little bit, but if anything, the fact that we have this on here, you should go, well, Brian, this is pretty damn cliche. What the hell just happened here? And I had this chart on here, everything. I haven't looked at any of these charts since the last time I updated them. So what a coincidence. I had this 50% rule on there and doink, and just got it. Now, there's some really interesting stuff going on with this British pound, because I don't know whether you remember, probably most of you were not in this space. Interesting how they don't even give us this data. I wonder. You trying to tell me the British pound was not trading before 2001? What? You know, this is where we get into the conspiracy of how the 1% fucks over the public. I mean, the British pound's been trading forever. Why is it we're not getting data from here? I mean, come on. It's almost insulting to the public. I don't know. I hate to say it, folks, but that's capitalism. You know, you got to understand. Half of capitalism is how can I fuck you over as somebody who's watching in the public. And really, I hate to say it, what you've all learned and seen over the past 2 or 3 years, especially with this, you know, Sam Bankman-Fried is a capitalist, and he basically did and does, and more importantly, not so much Sam Bankman-Fried. Frankly speaking, I think that guy's a puppet, and I think he got played like a deck of cards. The guy who you should be really upset with, which of course nobody's talking about, hopefully this son of a gun finally gets held to account. But you know, like this guy actually went to court, and I think he actually went to prison too. So, you know, these guys should, but he is a capitalist, and unfortunately, if you don't have regulations and you don't have like a cop on the beat, this guy never gets held to account. He gets away with it cycle after cycle after cycle. And I might make an argument this guy's just a patsy. You know who this guy is? This guy is who's the guy that was blamed for knocking off Kennedy? Why can't I not remember his name? I can see his face. Jack Ruby killed him. Lee Harvey Oswald, right? That's what this guy is. Probably like a mid to low level lieutenant, you know. Was Lee Harvey Oswald connected with the CIA? There's lots of conjecture that he was well before the fact. Was Lee Harvey Oswald the mastermind behind the whole thing? I don't think so. You know, by the way, George Bush Sr. was on the ground in Dallas, Texas, the day that you know who got whacked. So anyway, yeah, exactly. Well said, Nick, right? This guy, and unfortunately, he might have a very difficult time of it. But, you know, really the guy that you really want to hear held to account is, just Brian tweets out way too much. Should have an official Brian wants to make sure that we hold this guy and speak to the fire down the foot. There must be a way that I could create a hashtag or something that talks about this. But where is he? He's in here somewhere. Wait for it. Wait for it. Wait for it. Come on, 2 minutes. How far along was this? You guys all know what I'm talking about. The guy with the glasses. This guy. And that's the guy you really want to go after. I think he was sort of the, I would say if there was going to be a mastermind behind all this, it's these kind of guys. And anyway. All right, I'm not quite sure how I got off on that tangent. Sorry, everyone. Oh yeah, Like, why does the British pound not have any data? I mean, come on. Jesus H. Christ. Let's see if we can go and find some data here for you. You guys enjoying this? You want to spend the next 4 or 5 hours talking this stuff? We could be here all day.
I'm hoping my headphones remain charged for that long. But if so, I'm here with you.
All right, hang in there, buds. If anything, this is cool. This is one interesting take on crypto, where we might actually get like actually usable historical data that's on the blockchain that these guys can't screw with. So it's interesting how like a lot of Stewart's screener results are spitting up just pure Forex trades. And actually, there's a lady that I told all TRIers to watch her interview recently, Caitlin Long, I think her name is, and she was talking about how a lot of currency transactions are now they're still fiat currencies, but they're actually being settled on the blockchain, which I thought was fascinating. And so what you're actually going to find is that you actually use crypto to settle your fiat currency transactions, and you never even know that you use crypto, which I find hilarious. Yeah, well, I don't want to go that far, Cotter. We'll be here all day. Supposed to be talking about the commitments of traders reports here. So technically they were called the antecedents of antecedents something or other. I can't remember what the other which is of course the most bizarre name, but very typical of the way they used to speak around the turn of the century. They would use words like antecedents report, and it first started in 1927. So technically, we're not allowed to go beyond 1927. So we have to leave out the fact that Woodrow Wilson actually publicly admitted that he gave away the future of the United States of America to the banking class in 1913. We have to admit the fact that there was a famous play that all of your children, every single child knows this play backwards if you are in North America, and yet the irony of it all is they don't even realize that the play, and then it was turned into a movie, was actually written as a protest for the bankster elites taking over our society and bankrupting a huge part of the United States of America. We're going to have to leave out the fact that the bankster elites had, after the US Revolutionary War, taken over the US banking system, but there was one politician in particular that saw what was going to happen, and he had the foresight to kick them out of power. And eventually they even, and there's lots of connections to the person who tried to murder Mr. Jackson, that he, they literally tried to assassinate him for basically killing their breadbasket. And ultimately that actually ended up leading a huge sort of precursor to why the US Civil War happened. But we're not allowed to talk about any of that stuff today. Okay, back to the British pound. Now, can we please find a chart of the British pound? I mean, gee whiz. And then it's actually got some data. All right. I guess we're going to have to go to the Forex markets to try to get this data. Good luck. Let's see what we got here. Hey, look at that. Some data. It's a miracle. All right. So this is what I'm worried about. Actually, there is a very famous expression for what happened here. Does anybody know? And actually, let's see. There's 15 people over there on YouTube. Do any of you know what this was all about? This event right here. And there's a famous name for it. Somebody broke the Bank of England. Who was it that broke the Bank of England? No one? Chris, you know this? You should know this. You're a commodities trader.
Winston Churchill.
No. Hey, very good. Ming Doc got it. Voltaire got it. Nick got it, right? George Soros broke the Bank of England. So, um, the problem here is that these are socialist countries, and to all intents and purposes, socialism does nothing more than it just devalues your currency base. So I might make the argument that basically the British pound has been in a very well established downtrend line for a very long, long time. And you might argue, I don't know, does that Beamish guy suggest you do something when you see M's? So Mr. Soros saw this M, and the irony of it all is, what do you think the odds are that this counter trend rally was into something like a reload zone? So, if you actually get good at what we're trying to teach you here, you should actually look at this trade. I don't know. That Chris guy, didn't that Chris guy say there's one particular fib level that he really likes? I mean, look at this.
78.6.
I mean, look at that. So, was Mr. Soros's trade really that outlandish? Not really. It's just he had the balls to put the trade on and go for it. So that's off to you, Mr. Soros. And of course, looking back in hindsight, you go, wow, what a trade. Oh my goodness. So, fast forward to today. And, what I do find interesting about this is that we got to the point there where heads of lettuces were politely told, look, you just can't keep squeezing the bear side of the. Actually, that's not the right terminology. You can't keep squeezing the socialist message, and the irony of this socialist message in Britain is raised deficits, which of course are hidden taxes, because now we all know Milton Friedman. If you go on ridiculous money printing binges, at some point the market will say, look at, you can print all the money you want, but a loaf of bread is a loaf of bread is a loaf of bread. And it's just simply every unit that you have in circulation. And the irony of it all is we talk about this in the stock market all the time. Let's do a quiz here of just people on the call. If I was going to look for a company to invest in, what's the magic number that we want to look for when we're thinking about the number of shares outstanding on an issue? It's a very simple number, and ironically enough, actually, it's basically in the wheelhouse of Bitcoin, and it's why Bitcoin story is so pure and it's so true. It's no accident, folks. I mean, ideally, somewhere between about 20 and 30 million. So what a surprise, there's Bitcoin's got 21 million. Oh, do you think that's an accident? I don't. I actually think that is very intentional. And it's why Bitcoin can hold on to its price level. You see a lot of these, quote unquote shit coins, right? And they, on the Wednesday show, we laugh. Oh, this guy's got 452 million coins out. It's like, what the hell? This coin's got 1 billion coins out. And of course, it's like down at like fractions of pennies and whatever. So no difference in the currency. What we probably ought to do, which would be kind of an interesting study, is just overlay British, and I don't even know if we can get this data, but the British money supply. Is there any kind of correlation to this? Interesting how. Well, that's a British pound references, but where's the money supply reference? United States money supply, Turkish, Russian. The word there is British. What the hell? Canada. Maybe it's UK. Huh. We got everybody except the one that we want. It's kind of weird. Wonder how united this kingdom is going to remain. There you are, United Kingdom money supply, GBM2. Okay, well that makes sense. And then let's go. We'll move to new scale on left. And there you go. That's an interesting image, eh? Wonder what the data was here. Usually what we want to do with these things, you want to change them to like a log scale. So how do I do that? That's weird. I thought I set a scale on the left. Into scale B. Well, I guess I've done that. Bottom right hand corner down here. Oh, yeah, there you go. Oh, here's this one. So, now the question is, I might have done that for the British pound. I'm not quite sure which one that did. Let's go. All right, it's got it over there now. And then log. There we go. That's what I wanted. All right. So interesting how the British pound actually went up through this period. I don't know. We don't have any data from over here. That would be handy. Looks like on a relatively calm pace here. Moving up, then I mean, we kind of went dramatically higher here. Big jump here as well. So interesting how those actually, not really correlatory to the actual pound itself. Anyway, I was kind of hoping that would help. All right, so the point here is huge spike down. Market was basically in free fall. You might even argue that we came up against a pretty important sort of support line here. I don't know how relevant this line is, though. I just sort of eyeballed it a second ago. And then, through this, the trust, I think her name was, basically was escorted out of government. And now over the past month or so, they've tried to stabilize things. They did do a bit of an intervention there a while ago. But, it's kind of sad that, all you're given is this information when, we're missing a huge piece of the puzzle. 2001's right there. So you're missing all of this. So in a weird sort of way, starting your analysis right here, you're, probably more importantly is they've kind of conveniently left out this very significant pivot point. So, we talk about this as horizontal support and resistance. So it looks to me like this is a pretty important level here for the British pound. So it's interesting how the actual banksters themselves came in and kicked out government and said, no, you can't do this anymore at that particular level. That's interesting that happened there. You notice how this happened here. So if anything, M's and W's, the fact that we came down into this level on this candle and we punched through it, meant that there was probably going to have to be more to the downside. The fact that we came down to this level and stopped, we did actually punch through it though, didn't we? So maybe the banksters we're seeing are like, oh my God, we better step in and do something, or you might have another one of these kind of scenarios where the market just goes into free fall relentlessly. Uh, Ironically enough, there is really no reason to be bullish of this yet. They always say V bottoms need to be tested. And probably what has to happen here is we have to go from there back to there. And that is a trend line to a certain degree there. So, here, interestingly enough, is Chris is 78.6 right up in that area up there. I wouldn't be surprised if that's sort of your end sort of destination for whatever this counter trend rally is. Kind of like what we saw out of the Swiss franc, same sort of thing. And then we're probably going to have to roll over and test these lows. And, looking at this very long-term chart and the fact that we did actually break that low, lower highs and lower lows, I don't see any change to these socialist governments. And I can actually see it was a bit shocking, and my apologies to people like John Cleese of the world. The Britain that we all sort of Benny Hill kind of Britain, James Bond kind of Britain. John Cleese even sort of made reference to it. A fish called Wanda kind of Britain. That Britain's gone. It's quite remarkable when I was in the UK there last year. I mean, you don't want to come across as racist or anything, but the message to the public doesn't include any white people at all. The billboards, all that kind of advertising and stuff, very few white people. I see it here in Canada, same thing. The fabric of our societies is being changed right in front of our faces. And frankly, it makes sense. I mean, our standard of living is much, much better than if you go down into the Indian subcontinent. Oh boy. I mean, that's just a mess. If you go to Africa, if you go into Asia, I mean, there's still a lot of people that live only on a few dollars a day. I mean, their dream is they want to come to the West, and they are coming. I mean, you hear about the stories of migrants and trying to get into Britain and through France and all that. I mean, it's happening in front of our eyes. So it shouldn't really surprise us. But at the same time, too, if you're nostalgic, well, you got to let that go. That society is no longer with us. The interesting thing with that, though, is that lower highs and lower lows defines a bear market. This is a socialist society. The governments have done a great job of basically playing into the banksters' hands. The banksters are going to continually dilute and continually just keep printing more money, and your currencies are just going to slowly become less and less and less valuable. So anyway, it is what it is. That was a nice 20-minute diversion there away from what we were supposed to be talking about. But I think it's important that you put this move into context. And I don't like how the 1% has conveniently made it so that you, as new people to technical analysis, you can't really see the big picture. And I might even make the argument that this is missing a ton of data too. Why is this only from 1972? Trying to tell me the British pound wasn't around prior to that? I mean, come on. So we get played a lot in the public. So anyway, back to our story. What do we see here out of the short term? A couple of interesting things jumping out at me here. Especially if we pull this back to looking at that FX chart. So we said that there's a nice trend line there. That's probably brick wall resistance. We also have that trend line there. So interesting how we're coming up to that level as we speak right now. If we look at the commitments of traders, what are they trying to tell us here? I think as the pound was coming off here and the US dollar was rallying, you saw higher highs, higher low highs, keep in mind the commercials want to be on the other side of the trade. So them higher highs means they're buying more, means that the British pound should go down. So they got that right. Same sort of thing, the large institutions facilitate the trade. So we should, if we're expecting down, then we should see that the large institutions are more and more short and they're making money on the down. Looks to me clearly like some sort of major pivot happened there in September. And of course, again, that was on sort of the ECB's finally decided that they're going to start moving away from the negative interest rate policy. I don't even know whether they have yet or not officially, but I think that was sort of the catalyst that started to change things. You notice that on this push high here into this dump, we have divergence. So yes, price made lower lows, but the commercials did not make higher highs. So that should have been our sort of first warning sign that, hey, maybe the bear is done for the time being. Same thing here, price made lower lows, but in large institutions did not make lower lows, divergence. Then our next warning sign is, you notice that these M's, and look at this, this is a hell of a battle. M after M after M after M. So something clearly happened here. You can see a lot of this business was probably done with the small specs who were still bearish, because you notice the large institutions, they didn't really do a hell of a lot. But when they had to, they stepped in again here and supported the market, and it went through the top here, and that almost looks like it aligns like with that event there, right? So this, I think, was sort of the affirmation that, yep, the trend has turned. That event right there. This big sort of bullish reversal. And, you zoom in, kind of like what we did with the Swiss franc there earlier. You notice that looks like some sort of structural level, and really this breakdown and that breakout there, although you can't see it. Right there and right there. Looks like it's even maybe even a bar later there. This reversal bar here itself was a very, very powerful signal. In fact, from the candlestick people, this is actually an engulfing bar, and it engulfed the two previous candle bodies. Very bullish sign. Was there a trade here? That's awfully tough, because the problem is we're a million miles away from support, and there's the 50% level. That should have been your sort of technical objective. And then also too, this highest high here, then this next highest high, although it looks like this might be higher. 139.85, 139.17. All right, so it's actually there. Yeah. Interesting. So the trend line actually broke out through, or excuse me, the breakout that day that the institutions. Well, actually, I think what happened here was the breakout happened, and then the institutions all took positions on that breakout happening. And there's also an engulfing bar too. Very powerful signal there. And if we zoom down on the dailies, yeah, this was sloppier than slop. Now, one thing that I said here that it's not necessarily that I regret, it's just that I don't, every time you ever see the sort of the government come in and intervene in the markets, usually you don't want to take that trade. But I think what happened here was the government came in, intervened in the market, and that was sort of the catalyst. They actually ran the lady out of power. They kind of publicly humiliated her, which is a bit of a typical sort of old boy kind of tactics. Be interesting to see where this bot set up. So we did do 33. There's probably the trade. Very difficult to get in off of that. Almost impossible. But anyway, railroad tracks. There's that weekly breakout level. So and you can see there's the commercials. See, actually the commercials did break. The commercials, I think, like this railroad track. So that was probably an important level. Then back into this horizontal support and resistance. You can see there was a real war here through this level. So the institutional players all decided that, like we said, probably on the event of the euro and the Europeans now moving away from zero interest rate policy kind of idea. I think the commercials all said, okay, you know what? Time to position square. Actually, I like that thinking. So them bringing themselves back to the zero line. So there's your zero line. And the large institutions bringing themselves back to the zero line. Large institutions were heavily short. So they squared up those shorts and now they're neutral. Commercials being the exact opposite because they're hedgers. They're net long and they're bringing those longs off. And now we basically hit the reset button. So the way that I would interpret this is this event here was the catalyst that sort of changed the overt bearishness of this market. And the way I would interpret it is, as of this event right here, the commercials were like, you know what, we don't want to be so crazy ass bearish. Let's maybe square things up. And again, just like the US dollar, move back to the 50% rule. This is the mean. This is squaring up. I wouldn't necessarily say that you want to step in front of this just yet. If anything, if you had the balls to hunt longs off of here, this should have been your profit objective. Now, as you can kind of see from here, we're probably going to oscillate around that level quite a bit. That would be my guess. I think that's what they're going to do. Still letting the cleanup, right? So we still got that much more for them to clean up. The commercials have to clean up their longs, and the large institutions have to clean up their shorts. So somebody had asked me recently about the euro and if I thought there was a trade, and I said, well, it just feels like you're a bit early. So that's what I think is what's going on. Is we're just early. I actually do like the idea that the Feds are going to take it a little bit easier here now. The question ultimately is, how bad does this COVID situation in China get? I mean, like I said, I think there's something like 250 million now infected. So it's basically, it's going mainstream now. So does that kill all of this recent economic expansion? And then as a result, people start freaking out about the economy collapsing again. That would definitely hit the reset button. Fed also is raising interest rates quite a bit. Notice, prior to the whole initial COVID thing, Mr. Trump was barking about how he thought short-term interest rates were too high then. So interesting how we're basically in that similar scenario now. I don't know how it affects these European currencies. I do know, obviously, European currencies can be heavily influenced by what's going on in Eastern Europe. Interesting how we've actually heard Vladdy now talking about suing for peace. Go figure. All right, South African rands. And now here's a good example of that reset button being hit. So interesting how commercials were heavily short, large institutions were heavily long following this reset. So large institutions were long and they were squaring things up. So large institutions were long while this bull was going on. Started to square up in earnest, and the commercials started to get long through this correction. I get the feeling that the market, large institutions, commercials, all that, they kind of thought that this was a transition window. So Commercials all went heavily short. They're expecting a big bull. Remember, this is a proxy on gold prices. We had the conversation about Newmont. We had the conversation about the Swiss franc. I think both of those still pointing up. So interestingly enough, based on this information, I think that the large institutions and the commercials were thinking gold was about to go crazy. So fascinating how their bet through here, they went, uh-oh, now, you know what, maybe not. So quickly they scrambled to square positions up, and that's basically where we are now. So interesting how they thought that the gold market was about to go crazy. Now, this might have something directly to do with the actual South African economy. I can't really comment on that. Like historically, as I said, South African is usually considered a proxy on gold prices. So the fact that they've come and squared everything up here, be interesting when we get to the gold market, if we ever do, to see what that squaring up looks like. And are they squaring it? Like we said, Swiss franc's also another proxy on gold, and you can see they are squaring up as we speak. Have they finished? I don't think so. So if this thing has to come back down into this area, that means Swiss franc moves up further. Theoretically, I guess that's the same sort of thing. They were expecting the gold market to be uber bearish here, Swiss franc to be uber bearish there in October 21. We look at the South African Rand, May, October 21 is right there. So they were also, they were long the South African Rand here. This is getting confusing. So, so many damn markets. So they were squaring that up through here. And we came into this sort of, okay, now everything's squared up. Which way do we think this market's going to go? And that was through sort of January, March 22. So we go back here, January, March 22, that's in through here. Commercials were kind of backing off, kind of squaring up. I don't know whether we get a really powerful signal. It's interesting how they were going, oh, right, we're bullish. That means we're bearish of gold through January 22 through May of 22. So January 22 through May of 22, that was through here. Interesting how the large specs actually went super long there in like March of 22. So they were kind of front running this, the Europeans there by a couple months. I don't know whether I can really take anything out of that. I guess what I would just simply say here now is positions are squared. Nobody's at an extreme right now. And really, what we really want to see is who's going to W out and who's going to M out. What we should expect, based on this, if higher highs and higher lows are prevailing, then we should expect something like that. We should expect the commercials to continue getting long. If that's the case, then that means we should expect this South African Rand to come back down. It hasn't happened yet, and I think we're kind of late. So interestingly enough, if we use that 50% level kind of thinking, and a guy I used to trade with, Kenny Roberts, he would always start all of his conversations with, what's a 50% rule? So that's up there. So if anything, I'd almost want to see that while we are in this position squaring event, the price actually works its way up to this 50% level, and then we get a push one direction or the other off of that 50% roll. Kind of like what you're seeing out of these European currencies now. That British pound, I think, was a good example here. So we got the push into the 50% roll. Now I want to see some sort of W or M coming out of this check here to tell me which direction we go next. And it's weird. I mean, it looks like the end conclusion out of this. We can still see this guy's got a little bit further to go. The US dollar still got a little further to go. So I think the conclusion out of this is we're coming into these means, and then we have to see how the market reacts once we're at these means and where the direction that the traders want to take us. Looking at over in Asia, commercials have M'd out here and actually made a lower high, even though price itself made a lower low. So a bit of a divergence signal there. Coming back to the 50% rule, I think that's probably business as usual. This is the mean. I would imagine that this is probably going to come back down. This is going to come up to the sort of checkpoint, and then we're going to ask whether we get one of these crosses. Again, what's sort of facilitating this move of late? It's the talk that the Japanese now are starting to move off of this sort of negative interest rate policy back to sort of normalized interest rates. So you might argue that the reason why the US dollar went to such an extreme was because all of these central banks were all parked on zero and negative interest rates while the Americans were cranking their rates up. Now that we're seeing a little bit of catch up from the Japanese and the Europeans, we're seeing sort of a check of that prevailing initial trend. And I suppose the the next move is going to be, okay, once we've done these checks, the European and the Asian central banks are back in line. The question ultimately I have is, if this COVID situation gets out of control in Asia again, keep in mind that the yen is a million miles away still from the 50% rule. What we might find is that Colin and his dump chaser zone prevents this thing from actually getting up to those levels. So where is my 38.2? There it is. So does Colin and his dump chasers, do they prevent this from even getting back to that 50%? As it stands right now, I think the prevailing message that we're getting out of this Commitments to Traders report is that these currency players are squaring up the books. If the commercials were heavily long, i.e. they were thinking down market, they are coming back and removing those longs, and markets are coming back to the mean. If they happen to be short, then they are buying back those shorts, getting longer, and the market's coming back to the mean. I think that clearly is the message from this analysis. Same sort of thing. Interesting how we've already circled this. Going to be a pretty big event here if we go and M out on the Commitments to Traders commercials, i.e. they were long thinking down on the Aussie dollar. That looks like they're trying to continue that pattern. It hasn't come in yet, though. So we might even have a divergence starting to develop here. So commercials here were more long. Market was shorter and downer. Okay, that works. Do these guys actually start to break down through this key low? If they do, then that's a new M. That's like this kind of scenario. And it didn't translate into a huge rally, but you can see from this point right up in here when we started to roll over and these guys get less long, more short, then you see that that's what that rally is. And notice that that rally basically stopped right on that shooting star there. So we've had this rally, that's what this move is. But notice here, these moves higher, commercials not so aggressive. So if anything, what we really want to see, if you really think that this is a bull, we'd like to see this thing M out and break down. If this thing can hold these lows and start to turn back up, which you can see it's trying to, then that actually would be bearish of the Aussie. Same sort of thing with the large specs, just the exact opposite. I think you can make the argument top end of the range. Bottom end of the range, we're stuck in this sort of sandwich right now. So top end of the range, bottom end of the range, probably even goes all the way back to there. So we're stuck in this sandwich now. I don't really like this. If anything, again, well, what this probably is we just came back to the 50% rule, position squaring. But if the commercials can, turn back up here and we rock and roll up higher, then that means this guy is done and he's not going to do this kind of move. He's probably going, if this thing breaks, well, it's really simple. And actually it's pretty, clear. In fact, we could probably even drill down to like a daily chart. Yeah. So really simply put, and for the people who do like to follow the commitments of traders, this report comes out once a week. So it's not really like it's a huge hurry, but on Tuesday, we should get a new report. If we go through these lows, then that means that Aussie dollar should go higher. It'll be interesting to see whether the large specs can go through those highs. Again, that would be bullish. The bull has the ball, higher highs and higher lows, lower highs and lower lows. If this stops here and can somehow turn back up, then the bears are back in control. But as kind of the prevailing message of the day, and this is half the reason why we do this, but probably isn't like earth-shattering to anybody. I think we're getting a reiteration of that message. US dollar is still working its way down into 50% levels. And the international currencies are still working their way up against the US dollar. I'd say same thing here on the Aussie, although terrible trade location. And this thing has to top out. And if it does, then we're probably going to see this thing work its way a bit higher. But you can't take a trade there. We're basically in Collins' dump chaser zone. What you would need to justify a trade here, think like bearish bots. So here I would go there to there and go bot setup. And I would say, have we done 33? Yes. Have we gone beyond 66? No. So then I would take this and I would drag that down, whatever this high is. And can I start getting lower highs and lower lows? And if this kind of price action develops, and my hunch is the commitments of traders reports, so the commercials is going to W out, start moving higher. So at best right now, and this seems to be the theme right across the board here, is we don't have any trades. So I spent the past 2 hours telling you it's a big hurry up and wait. There's just nothing to do right now. But having said that, hopefully you get an idea of how you can use these commitments to traders reports to try and help you see what the big picture is. Aussie dollar and Kiwi usually move in tandem, so I'd be surprised if this Kiwi looked a heck of a lot different. So you can see Aussie dollar topped out, rolled over. Kiwi topped out, rolled over, right? You can see back and forth. There's the top in the Aussie. Didn't quite test the lows here, whereas the Kiwi did. If anything, good analogy. I don't mean to be rude, but what the hell do they do in New Zealand other than, woke politics? So, a lot of interesting, so politically correct though. Like, do you notice how they basically turned into like zombies? Like Canada, our substitute drama teacher, he would like nothing more than just a country of zombies. Just do exactly what you're told and go buy your electric car because that's what you're told. I don't know whether, using, cobalt and lithium, I don't know whether you've seen how those industries operate and whether they can even be scalable to the size to actually make electric cars realistically, alternative to the gasoline internal combustion engine. That's another conversation. Unfortunately, the 1%, they want the world to move towards these electric cars because Mr. Carney even said it means $100 trillion in borrowing. So the banks love this because that means about 5% or $5 trillion in their pockets. So the alternative is just keep doing what you're doing. No new investment. No $5 trillion fee for the banksters. You wonder what motivates them or what motivates guys like Klaus. Well, anyway, point here is dead cat bounce. The commitments to traders report, so they really giving us anything that's actionable here right now? I don't really think so. This is a weekly chart. So if you're going to use this kind of data, I mean, I love when you get these sort of extreme moves. So the commercials are at an extreme. They've got to take positions off. And so you actually get a rally here. Same thing, large specs at an extreme, big rally. That's what that was. Then you actually get like a check and then a reactionary move, big sell-off. Big sell-off on the reactionary bull move there. So, I suppose you could argue, especially when you get these crossovers, they're killer. So, but notice we're not getting crossover. Here's a good crossover here. So the commercials were like bearish, which is bullish. So they turned bullish, which is bearish. Interesting how commercials were bullish, which is bearish. Sorry for the confusion. Large institutions were bearish, which is bearish. But notice price has just been sort of stair-stepping its way down. So I don't know whether we're really getting hopeful information from the commitments to traders reports here. But I would say, good old Kenny Roberts, 50% rule. We're seeing basically checking of positions here. So we're getting back to the point where everybody's neutral and we can see a new direction going forward. So really simply put, if we see that the commercials end up Wing out here, then that should translate into a bearish breakdown in price. So we'll change this to teal. Like so. And conversely, we've got actually the smatterings of a little bit of a top there in the large institutions. So you can see that the large institutions themselves, they're getting a little bit sort of vertigo. So yeah, they put in a little bit of an M. So you can see that at 50% tags, there's probably a lot of Kenny Roberts fans, for lack of a better word. We've come back to the 50% level. Let's just square up our positions, because that was a V bottom. Keep in mind, that's not a W down there. That was just straight down, straight up V bottom. So I don't know. I get the impression here, often I talk to you guys about candle body highs for trade location. There were a bunch of trap bulls all up in here that would love to get out of that trade. Now there are probably some trap bulls from that level there and that level there. These guys were just trapped up here. They bought on this sort of enthusiasm, whatever it was. So this rally right up into this level here was their opportunity to get out. And of course, good old 50% rule. Like we said, Kenny Roberts, this is a really good rule for you to remember, that this is like a position squaring move. This is nothing more than the market was at an extreme and it just bounced back to the mean. So since we have been making lower highs and lower lows, my gut is that this is going to be a how would we do this? We'll go maybe here to here. They're there. And as I said, bots. So did we do 33? Yes. Did we do 66? No. All right. The bot is alive. And really the way I'd want to use this commitment to traders report is, can I get 3 lower highs to develop somewhere above this 60 level? So like like that. And can I get that anecdotal information out of the commercials, right? Because commercials are teal. So let's change that to teal. Can I get nice W's to come in off of the commercials? That would be the perfect scenario for a trade going forward. Right now, all I think this is the market was at an extreme. We went down, tested a low, candle body lows for trade location, trap bears. They needed to get out. They got out here. Dead cat bounce to the mean. Now we find out exact same thing. Dead cat bounce to the mean. There are trap bulls here. They had the opportunity to get out. Everybody's squaring all their positions up. And now we got to sort of say, okay, who's going to blink first? Do these guys W out? And if that's the case, then the bearish scenario takes over. And ultimately, we're looking for a move down into here, which makes perfect sense. I mean, you can see this is basically our trend line. So a move down into this area over time would be perfectly logical. Remember, all these socialist nations, they're printing money. Now they don't even talk about taxes. Fuck taxes. Who cares? Nobody's going to bother paying taxes. Just go and print more money. You don't even need taxes. What's that going to do to the value of these currencies? You know, I did put out an interesting tweet recently. It's in a bit of an aside, but it's basically the same comment. Is, you know, the writing is on the walls for these socialist countries. They don't realize it. Of course, democratically politicians, substitute drama teachers, he hasn't got a fucking clue what he's doing when it comes to economics. But the writing is on the walls. You go and just relentlessly, the blue line here is your money supply. So here is socialist Australia. Here is socialist Canada. You go and endlessly print money like a drunken whore. And yeah, your currency is going to collapse. It's just pure gravity. Nothing more, nothing less. I was trying to show you that on the British pound, but it didn't quite pan out that way. It's interesting how the Americans are trying to get some religion about the quantity of their currency. And through that period, what a surprise, the US dollars just boomed, the dollar index has boomed higher. So, message to the socialist countries of the world. And the worst part about it is these socialist countries conned themselves into believing in their socialism. What they didn't realize is over the past 20 years, these guys, the capitalists, they've been diluting their currency, artificially offsetting their currency strength. So these currencies down here, they didn't look as bad because they were commodity-based countries. And as these guys, the industrialists, were diluting their currency, the price of commodities was rising on a relative basis. Now these guys are getting a bit of religion. Commodity prices are coming in to a certain degree. And now the commodity currencies, they have not gotten religion about their ridiculous spending. And so as a result, their currencies are collapsing. So could we see the Kiwi, who really, they have no industrial base. It's not like you're building aircraft carriers in New Zealand. Could this thing trade down into the 40s over the next 5-10 years? Unless they seriously start to put the kibosh on all this crazy socialist woke society that they're living in? My answer is absolutely. And it will be the market that ends this woke, socialist, almost quasi-communist world that we live in. The market is going to correct this very quickly. And unfortunately, what it probably means, and this is why I have my Liam Bitcoin fund, is that it probably means that these stupid fucking socialist democratic substitute drama teacher societies, they're going to have to cut spending to people like who are on disability and who are on sort of, long-term care. those are the people that are going to suffer when these stupid woke, well, they don't need to pay for their college tuition. We'll just comp it. But it ends up, people like Liam who are absolutely dependent on the system for, just being alive. They're the ones, of course, that will get the funding cut down the road when their currencies collapse. Anyway, blah, blah, blah. Anyway, like I said, I've got Liam's Bitcoin fund. I'm not even allowed to touch that. I'm not even allowed to look at Liam's Bitcoin fund. That's his money. And it's strictly there in case the whole social safety net collapses, which unfortunately, looking at these kind of charts and these kind of predictions is, I think, more likely than not going forward. And speaking of which, let's pop on over to the Canadian dollar. Good timing. All right, I think we're probably going to have to just do the currencies today, because if we actually do all of these commitments to traders reports, we'll be here the next week. Hope you guys are enjoying this. Ho, 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 Merry Christmas. I hope I'm helping you guys. Anyway, edutainment, maybe? I don't know. Maybe, what we need to do, Chris, is I think you probably need to do chapters on the individual currencies.
Yep, that's what I was thinking. Yep.
All right, here comes the Canadian dollar. Are we ready, folks? Here we go. And happy Boxing Day to you, Mr. Delmity. All right, where do we begin? Commitments to traders reports, just to start off with, long-term and short-term. What do we got here? We got the weekly and monthly, yeah. So you can clearly see they're in a position squaring kind of mood here. They can't quite figure out what the hell to make out of this Canadian dollar. Actually, you know what? Before we get into this, I'm going to fill my coffee up, so I'll be right back. Everybody take a 30-minute break, or a 30-second break. All right, sorry about that. What's next? Canadian dollar. Hey, look at that. You guys get to see me. So now, how many YouTubers do that, eh? Talk about Brian, why do you think you don't have very many followers and viewers? Maybe because you want to get up and walk away from the video halfway through. Oh well, I'm having fun. Okay, so Canadian dollar, like we said, looks like there's a whole bunch of position squaring here. But one thing that kind of jumped out at me when I was eyeballing this is, I don't know whether you guys can see this. I don't know how long lasting it'll be. If I put away the large specs, just so you can see the commercials. Notice this W here and what happened. Oh yeah, I see that. It's actually, yeah, sorry about that, everybody. Okay, so there is the chart. Hopefully you can see that. Thank you, Chris. And how are you doing? Are you okay? Do you want to, if you need to pop out for a second, feel free.
Everything's good on my side. Keep it going.
All right, cool. All right, so you see how there's that W there in the commercials. And then notice how there's this M here in the commercial. This is a monthly chart, right? So this is pretty long term. So notice after this M, theoretically that should be bullish. So that's sort of what painted that. I mean, it's not that big of a move. Then notice this W, that should be bearish. And that came in right here, right? That was that big dump. Then they scrambled and covered their positions. That, of course, with them being moving up egregiously, that actually is bearish. Then we M'd out, so they're heading down now. So that was through this consolidation. You can kind of see this looks like a bit of a head and shoulders. So that push up there, that corresponds with this M. And that translated into that push. This is down bearish. That should be bullish of price. And up she goes. So where are we? So following that big move down by the commercials and the big move up in price, then there was a quick snapback move. Keep in mind, this is a monthly chart. So if we look at the dailies, weeklies, it might be a little tighter, but nonetheless, boom, snap back to the mean. Okay, we don't really know what the hell we're going to do here. If we go and M out, then I think that means, remember, commercials opposite, kind of like what you saw here. If this M's out, then look for a big rally. But that didn't happen, did it? Instead of M'ing out, we came down against this low, then came down against this low again. We're flirting, okay, we're gonna break, let's go. And then all of a sudden, ooh, quickly back to the mean, then down, and then what the hell? That's a W. Isn't that bullish? No. Bullish of the commercials means that this is bearish of price. So based on this W here right there, it should actually be thinking down now. So that's sort of like this move in here from there to there. We actually should be thinking down. Now, had a pretty big failure through this level. Right there, right? So there, right? Those two bars. That's where this thing W's, and it breaks up through the top there as well. So there's a pretty big shift. And notice how this was off of here and here. So basically, you can see there's some sort of major pivot point for this currency right off of that level there. That's a pretty darn important level. 76 even. I don't know whether it's, well, I guess that would make sense because above 76, you're thinking 76 to 80. So that would be sort of like, this zone up here. And then below 76, so then you start seeing prints of 75. Well, then we're thinking 70 to 75. So I think there's sort of like two kind of sides of the coin. Canadian dollar stuck between, are we 70, 75 or are we 75, 80? I think that's what's sort of going on here. With extreme moves above 80, but you notice that the market doesn't really stay above there very long. Probably same thing down here. Extreme moves below 70, but the market doesn't really stay down there very long. So if I was, the problem with that kind of thinking is that it doesn't really, that's not really conducive of a really winning trade unless you find like pivots right off of the peaks. And unfortunately, and we're seeing this message over and over and over, is what do you think the odds are? We're sitting at a mean. There's 50% level. What a surprise. That pivot level that we talked about, 75, 76, is the mean. So have we accepted below the mean and now we're going to come back down and test the bottom end of the range? That's what the commitments to traders data is telling us right now. Also, too, Canada's got a bit of a funny sort of part of it in that the Americans have been the ones raising interest rates. So if the Americans are like, okay, well, you know what, maybe we go on pause for a little while, then odds are the Canadians will have to take a pause on interest rates. So you might find that it's not so much that Canada is bullish or bearish, but more like North America is bullish or bearish. You know, we might also look at Mexico too. And it might just simply be that the Americans commercials are sort of expecting down after this huge move up. And well, we're also expecting that out of Canada. And it's more kind of like money's flowing out of North America and flowing back into Japan, back into the ECB, back into Europe, versus it just being, you know, we just hate substitute drama teachers, the guy's an idiot. Although I think there's probably a lot of that there as well. Have I mentioned that I'm not impressed with substitute drama teachers leading countries? Anyway. So actually, as an interesting aside, what are the Mexicans doing right now? Ah, interesting. Very different message here, right? So we did have that W for the past couple weeks in the Mexicans. Money was pouring out. And if anything, this bullish scenario here should have been bearish for the Mexican peso. But wow, something happened over the past couple of weeks out of Mexico. Oh, actually, this is month, right? Let's go look at that weekly chart. Ah, wow. Now that's an interesting chart. So I guess kind of along the same lines as oops, what happened there? All right. So it looks to me, especially on the weeklies here, looks to me like there was a precipitous drop here, i.e. they were expecting the Mexican peso to go up quite a bit through here. I think this is maybe like the latter part of that US dollar rally. So that's up here. Interesting. So there is the peak of sort of the US dollars sort of sell off, or no, that's not the right word. Pullback in large institution participation, squaring up of commercials participation, right at that very apex event, and that is the week of September 22nd. So if we look at Canada, week of September 22nd, that is right in there. Interesting. So that was the peak in the, and remember, this was all a function of what happened with the British and heads of lettuce and all that kind of stuff. So the Canadians, their currencies took a little bit longer to turn back up and join all the Europeans and all that. Mexicans, 22nd of September. Interesting. The Mexican peso did very, very well through that window. And interesting how the commercials after that 22nd of September, that US dollar index peak, the Mexican peso pivoted and went like, remember, this is like I'm bearish of the Mexican peso. This is I'm bullish of the Mexican peso. So the Mexican peso just went absolutely uber bullish through this event right here. Maybe it'd be interesting whether that was like a political event in Mexico. Like, I wonder what caused that. That's remarkable to see. But you can see shooting star and then huge. This is, if anything, where we want to try and hunt the commitments of traders data when you see events like this. That is a very significant change. Something dramatic has happened here. So the Mexicans went from uber, not Mexicans, the traders of the Mexican peso, went from like uber bullish. My God, everything is going to go to the moon, to, all right, cool your jets. And now we need to go into position squaring mode. I think it would be interesting to see if this actually hit objectives. So, trend continuation kind of guy, did this do 33, did it do 66? It actually went well beyond 66. I don't know whether there would even be a trade for me. But did this thing, yeah, it's fascinating. So we didn't even get up to A, B, C, D objectives. Wonder what the hell happened here. Something weird happened here, right? Must have been something. Be interesting, that great Del Moody guy. You're like a student of the market kind of dude. You're probably not interested in Mexico. But anybody on this site who's a real student of the market, something significant has happened here in Mexico. I don't know what it is, but something happened. So I think I've told you guys before, I'm a big fan of the empire pattern, which is a very difficult pattern for the public to trade. And in essence, it's this candle, and this candle make an empire pattern. The interesting thing here is you can see they left a price gap here. So I would even imagine we should see a counter trend rally. And I'll tell you, from a trader's perspective, that's actually setting up a really interesting trade level, because I'm a big fan of like candle body highs for trade location. You can see we've had a pretty substantial rally here. So it might just be interesting to go down to the dailies and just see if something sets up off of this candle body level. That to me looks like a hell of a trade location. So as I said, something significant triggers. If anything, I always like these kind of patterns too. Impossible to trade, but notice how they left this huge wick and this huge tail. So now this is a trading range. And if we can accept on other side, and that's basically what this is, notice the counter trend rally, all it did was it just brought the market right back to the bottom of the range, and it was rejected again. I would say that, and now probably like, what do you think the odds are this is a reload zone? I'd say probably pretty good. So there to there, and there to there, 61.8 is the original breakdown. Brian loves his 78.6. Notice this high right here, that'll be horizontal support and resistance. So something like that. So you can start to see, I like the idea that if there's going to be some sort of counter trend rally up into that window and a nice M, that would probably set up a pretty interesting short. It's really predicated on what the hell happened here. Something significant happened here. I'm not quite sure what it is. I don't really follow the local Mexican story, but clearly something spooked the market here. So it'll be interesting to see how this plays out. That'll be one, especially for the level twoers who just did the commitments to traders report. That would be a really interesting one for you to use as a case study. How does this play out? Is that the end of the move? What I would just simply say is, if we were looking at the, we'll just look at the commercials, right? We see a pullback here and then a W off of that line, then I think you really have your wicked trade. So this is the extreme trade. Now what we want to see is a check of the mean and an acceptance of this trend. So that would imply bullishness, bearishness, a little bit of bullishness. So interesting how we had this huge rally and really the commercials did absolutely nothing. So I don't necessarily think that the commercials are even endorsing this rally here. This rally happened because there's a bit of a vacuum in the market, all these gaps and stuff. Like I said, something, and it'd be interesting as kind of a side project if somebody wants to look into it. What the hell is going on in Mexico? Something clearly significant is happening in Mexico right now. Anyway, is there a trade to be done here right now? No. I think if anything, if you had seen this heading down into these levels and you had seen that double bottom breakout, at this point here, I'd almost be thinking, let's start hunting for reasons to get short. And so that would be sort of keeping an eye on this reload zone, that gap fill, and what does this thing actually do through here. The fact that this was so violent and really such a big move on almost nothing, I would have thought that we would have done like A to B, and then C to D, something like that. And really, I would not have thought that we would have such a big rally, although there's, these gaps. That does make sense. So, fascinating. So keep an eye out. If you are a trader of currencies, keep your eye out for something along these lines in the not too distant future out of the Mexican peso. Brazilian real. I've always not always, of late, I have been wanting to be more bullish of Brazil. Of course, they've got massive sort of political situation there constantly. I think the Bolsonaro, or I'm sure I'm butchering his name. I think he was recently thrown out of power, and I'm not quite sure how all that's going. Fred on the site. You want to find out what's going on in Brazil, just check in with Fred every once in a while. Interesting how large institutions started to get less bullish through here. Probably let's put this back to the weekly chart. Yeah, there we go. So topping out, commercials getting more bearish here, and what a surprise, price came back down. Sort of hit the reset button, if you will. A little bit of bullishness, take the market back up. New M's, that's new bearishness, and back down comes price. We're back at that sort of check level. And, on the Brazilian real itself, unfortunately, I hate to say it, but it almost looks like there needs to be another leg lower here now. I was kind of thinking we would turn back up. But based on the fact that these guys are looking so bearish right now, large institutions, lower highs and lower lows, lots of M's, commercials, higher highs and higher lows, lots of W's. From the institutional perspective, like the smart money perspective, man, it doesn't look bullish at all. I suppose, from a technical perspective, probably want to see this thing get up. If you're a bear, you actually want to see it bust through this, then do kind of like a Benkoff check and structurally fail on the other side of that trend line. If that develops, then away you go. So the fact that you're so close to that trend line, to me, that doesn't mean that there's just no trade here. If anything, probably at an extreme, when you start seeing these M's, you could think about a move back down against these lows. Now that we are here, right, you probably even say, what's the mean? 50% rules. And so I think that's basically where we are right now. Right? Yeah, there we are, 50% rule. So I don't really think there's anything to be done here. And, I actually like the idea of the British real, or the Brazilian real actually trying to bottom here. It's such a huge consolidation, and it's come down an awful long way. I mean, look at this thing. Holy moly. So what's the mean on a long-term chart? Oh, mean on the long-term chart, I think, is up here, where the original structural fail is. So I don't know how long this is going to take to turn, but if I was thinking bullish, that would be my objective way up there. Call me crazy. Probably it's going to happen here, actually, there. So where does that eventually intersect? Somewhere way over here. 2035. Oh boy. Sure hope you got patience. I suppose you could make an argument that we could be bullish if you could get like structural signals above that line, but we're a million miles away from there. There's just nothing to work with here in the short term. I was feeling like a while ago that we're gonna be like boom, but then that low was taken out, so that kind of disappointed. But the fact that we took out that high, so boom to boom, then drive that back, boom. There's our trend channel. And notice that trend. That's kind of cool how I drew that, right? So there to there is just lowest lows, and then I dragged the channel back to the most recent peak. And it basically painted that as an objective. What do you think? Is that usable information? I think so. So, do we get anything to help us see a trade idea out of the commitments to traders right now? Nope. Lower highs and lower lows defines a bear on the green. Higher highs and higher lows defines a bear on the teal. We are at a checkpoint. If anything, what you'd love to see, if you're a if you're a bull of the Brazilian real, you'd love to see something like that from the large institutions. But you can see how long that's going to take to develop. That's not going to happen anytime soon. Right? Even if we go something like that. That doesn't happen for probably the better part of 2023. I think this thing's stuck. And, here we are, 50% level. We could very easily oscillate a little bit below the trend line, a little bit above the trend line, get all the people all bullish above the trend line and it's a trap, get all the people bearish below this trend line and it's a trap against this uptrend line, it's a trap, and we just chop back and forth. So I just don't see anything to do here. Russian ruble. Problem is the West is basically shit on the Russian ruble here. This is this even reporting November? Oh, it is December. Traders are not giving a commitment at trader, so I don't think we can make any reference to that. I don't know whether this is actually real data or not, though. I did find it interesting that the news reports are that Vladdy, of course, is saying that he's willing to talk peace. Is that a stalling tactic? I don't know. Is it a sign of weakness? I don't know. I will say, just looking at the price pattern on the charts, if you were bullish of Russia, you got told a huge message right here to temper the bullish enthusiasm. Beautiful inside bar failure there. In fact, even that's a harami. So even the Japanese would be shorting the Russian ruble through that. That's also a weekly price chart. So what a fantastic signal. And of course, the past month, I guess this price chart alone sort of describes why maybe Vladdy's suing for peace. Looks to me like the market has decided that things aren't going very well for Russia right now. I don't know. Tough to say. Coming up against key horizontal support and resistance, this low here from July of last year, I guess last summer. Wicks and tails like to be eaten. So we have actually given the previous bears the opportunity to get out there and cover their shorts. Also notice too, big gap up top here. So we could very easily see a counter trend rally back up top to fill that in. And unfortunately, with this sort of Western sanctions and boycotts, there's no information for us to use here for the commitments of traders. Anybody who's just trading the chart on technical levels, what a surprise, the mean 50% levels. If you were thinking about being a buyer, you probably want to hunt reload zones. And of course, there's Chris, our Russian ruble trading expert, sitting there at his 78.6, waiting patiently. And probably what this actually ends up being is what they call an alt ABCD, which means that's 127.2 all the way down to 1.618. So we're going to take our extension tool and project it off of that high. And there's 1.618 against that 88.6. There's the midpoint of the 1.272 to the 1.618 off of Chris's. You notice how that's a beautiful empire pattern right off of Chris's fib there. So my hunch is if there was a quote unquote buy level on the ruble, it was down here at this, what's that number? 9695, let's call it 97, somewhere in that area. You know, if you were botting and you hit that inside bar reversal, congratulations, fucking killer trade. You know, bots themselves, probably something like there to there. Although if you're a Westerner, you're not even allowed to trade this thing, so I doubt you could do that. But nonetheless, just demonstration. I know we do have actually a few Russians in our community, although I do make it a habit to try and ostracize them as much as possible. Sorry, Russians. But botting bots, we did 33. We did not do goose 66, so the bot has come alive. Could you have traded this? Like I said, would have taken balls of steel. If we go down to, well, first off, let's throw on the bot levels. Actually, your short level on this looks to be about 15, looking for, looks like 11, which would have been a pretty good trade. Coming down to say like a 4-hour chart or something to see if there was actually a trade level to get in off of. Yeah, that's what I kind of thought. You know, because you're sort of sanctioned and all that crap, the trading itself looks splotchier than splotch. So there's not really much you could do in the West. But, you know, probably on like a Moscow exchange and stuff like this, there probably was lots of liquidity. And your goal would have been to try and sneak in. Where am I here? And actually, it doesn't even look like this even has any data. So this might even just be talking out of my ass because it doesn't even look like there's even data to use here. So interesting that let's see, does the daily chart have that data? Oh yeah, there it is. So this must just be sort of like, okay, we've got to figure out how are we going to report this on these Western exchanges when you're not even allowed to trade this. But what's interesting, remember we said inside bar off that weekly chart. Notice that inside bar is actually, if we change this to a line chart, you see that actually that's a pretty little M. And look at that, 3 lower highs, fucking A. So if you wanted, I would have called this like front running the bot is if I get a whole bunch of, you know, the expression is, what are you supposed to think if you ever see the market smiling at you? So if you get 2 smiles in a row, then the market is really smiling at you, it's getting ready to take your money. So nice analogy of if you wanted to front run this trade, you'd be short from here. This is kind of like Julian's risk window. He loves to take those really, really small risk windows, looking for that monster payout to the downside. So in this case, if you had balls of steel, although, you know, I don't know, maybe shorting the ruble in Russia might be asking for a prison sentence, who knows? But if you could have shorted this, you know, and there's the level there. So up there, and we'll go there. And if you were shooting for that bot objective, then that would have translated into a 13-to-1 risk reward. Talk about badass traders. The whole point of this is just to simply illustrate. And actually, you know what? That might even have been a good. Yeah, so good analogy. This is what we call the LJ setup based off of an old site member. You don't really want to take this trade here. You want to wait for a market structure signal on the other side of the trend line, and that's what that second M is. So really, really good example of the application of that LJ trade setup. You worked in conjunction with the bot to produce just an absolutely insane trade. So, hey, there's kind of we were talking commitments to traders. and you got a lesson on how to trade setups, because there is no commitment to traders data on this one. So there you go. Merry Christmas. That would have been just a killer. And this is where I really like to trade options, because trading an actual like futures contract, I mean, you don't know what the hell's going to happen. But at this point here, if you could have just gone in and bought a put option, then the maximum risk on the put option is just the purchase price of the option. If Vladdy comes out and murders anybody who actually is outright shorting the Russian ruble, or maybe worse, you got a 30-year Siberian prison sentence, well, you can just say, hey, I'm long a bunch of rubles and I just bought the put option as insurance. And technically, I'm still long. So don't go and shoot me. You buy the put option and it's just a piece of paper. You could even take the put option and just tear it up in front of Vladdy's face and say, look, now the put option's gone. So I love put options. They give you a lot of flexibility in this world. And this would be a good example where you could have had the open futures contract. It would have been pretty dangerous. You'd be on record as being short, or you just go buy a put and you just throw it in your portfolio. And if the thing does collapse, well, the put should have intrinsic value based on whatever the final price is versus what your strike price is. So anyway. Okay, so I can't do any commitment to traders commentary there on the ruble, but very interesting conversation in trade setups, and kind of leaning bearish here now on the ruble. And I hate to say it, but this whole Ukrainian experience, I mean, literally, I don't think the situation could have gone really technically any worse for the Russians than it did. They've already now crossed 100,000 deaths. So of Russians, the sad part about it is probably 100, 200,000 Ukrainians have been murdered. And the 100,000 deaths in the Russians, that doesn't count all the mercenaries. It doesn't count a lot of the sort of the conscripted ethnic minorities and stuff. And like the, what do they call them? The Kardovites or Kurdovites or something like that, the Chechen guys. I mean, this has just been an absolute disaster what Mr. Putin has done here. And what a horrible legacy for the rest of his days to be known for this. Oh, well. Anyway, if anything, it's good to see that maybe the market is sort of speaking that, hey, Mr. Putin, enough is enough. This isn't working. Get the hell out. Who knows? Why don't we finish off this video, because I've been blabbing away here for a couple hours, so I think you got some value out of today's offering. With a quick look at Bitcoin, let's see if we can make a head or tail out of the actual commitments to traders report. I don't know whether we can or not. For the longest time, it's been sort of like, who is industry in this cryptocurrency story? And I've gotten the impression that the commercials aren't really established enough to be used as a good proxy in the classic sense of Bitcoin analysis. So with that said, I actually personally prefer, and I think based on this image, I think we could actually make the argument that the large speculators are, to a certain degree, like the commercials in the classic commodity industry. And if we look at it from that perspective, then maybe this actually starts to make a bit of sense. So we notice price was coming down from this peak here, and we see large institutions actually were getting more long. A little bit of an M here. You can see, is the market going to top out here? I don't know. Notice we had this rally here, kind of a sideways. Then just an absolute ridiculous fall right off a cliff event here from the large specs. And notice that was our face rip move up into the ultimate peak there, right? The ultimate peak was actually that date there. That would be like those commercials and doing the exact opposite. What does that mean? How do we use this information going forward? Could we make the argument that if we see a dramatic drop-off in these large institutional players, we're at some sort of significant pivot point in the market? Sure feels like that, eh? Notice how they've been just slowly grinding their way longer as the price has just been slowly grinding its way down. Did hit a bit of an apex in this event window right here. And now we seem to have gone into a bit of divergence. We're actually making lower highs and lower lows now. It's interesting how we did make lower high and lower low there. And then we went into absolute insane face rip mode through here. Do we get absolute insane face rip mode? We didn't get much, eh? But interestingly enough, that big red candle, dumb, that is that low there. But this low here is actually that funny little candle there. Again, I just don't know whether this commitments to traders report is actually even useful for Bitcoin yet or not. Unfortunately, half of our conversation here today, and actually probably more like 3/4, is like, man, it's not really helping us find a trade here. It's kind of a shame, but anyway, hope you've enjoyed the conversation. If anything, it's good to go through this process. The only market that really jumped out at me that, hey, there's usable information, I think, was that Mexican peso. But anyway, back to Bitcoin here. We're at the zero line. So technically that means that large institutions are not really net long or net short. Notice when we were uber bullish, they were uber bullish in price, actually uber bearish in positions. They're net short. So didn't really have that and nearly as an extreme of a move. They did get net long through all of this. Wonder if I make the argument that this net long, this is them being uber bearish. If this thing was about to puke out and dump hard, it would have. And it kind of just stopped. So I sort of left scratching my head a little bit. This latest dump here was on a down move. When we've seen that, you know, especially like this big dump here, that was actually on like the heels of a big up move. So I don't know whether this is maybe some sort of catalyst, or maybe the data set's changing. Let's see what the commercials actually did there. So, you know, let's take the classic analysis approach and see whether we can discern anything out of that. The commercials, theoretically, if they're going uber bearish, that should be bullish of price, and that clearly was not the case. So I don't think that this has come into line. Interesting how wide the variation is here. These guys are still technically net negative. So I don't know whether we can actually really get any usable information. Might be interesting to look at what the small specs are up to. So this would be you and I. So uber bearish. Interesting how we kind of lost interest and then sort of last moment, and this is typical public. Public kind of thought that this was the top. Then there was this last sort of panic, and the public just went uber long and got crushed right into that top. Market came off, and they all scurried quickly back to the sidelines. And basically, they've either been slightly net bearish or slightly net bullish, but every time they do get any kind of bullishness, in come new M's. We've just been slowly working our way down here. Probably the really easiest way to use this, and actually a little bit of a surprise, is you notice that we put in a pretty wide W. I don't know whether you can say we actually broke out through the top there, but that's probably sort of anecdotal evidence that a bottom has come in. So I guess you might even argue this kind of looks like a shoulder, head. No, that wouldn't work. No. That would almost be like shoulder here, and this whole thing is a head. But I get the impression that that sure looks like a neckline, eh? Something like that. So I don't know how this looks, but I guess the point here is, I mean, it's nice to see we did come back to the zero line. Does the small spec actually have to go negative uber short for us to actually mark a bottom in corn? I don't know. I don't think so. But only time will tell. So I don't think yet this information is overly useful. I think it's still, well, I mean, frankly speaking, I've asked, and recently we had banks like Silvergate, I think it is the name. This was sort of the beginnings. No, that's not what it is. SI. Silvergate. Yeah, there it is. This is the beginnings of sort of, all right, there is a commercially viable crypto industry. But how do you think that's going? So, is whatever this commercial, and it's interesting, you can see the volume has really ramped up right as of that sort of FTX nonsense. So, unfortunately, this might be an anecdote that the commercial side of the crypto industry is just not here yet. It's not ready. It's not ready to go prime time. So that's kind of what I'm thinking right now. I just don't think crypto data is usable just yet. Sucks. I would like this to operate just like the classic commodities industry, but I'm just not seeing it yet. Can I take anything out of this report? It's interesting how the large specs were consistently bearish and making lower highs and lower lows all through this correction period. Is this maybe a vote for up? I don't know. Something clearly shifted here, and then we started commercial, or the large institutions started actually covering their shorts through this. They never did cover all of their shorts until we got way over here. Notice that at this point, it's uglier than sin, but I do believe this is a massive head and shoulders. Remember we saw earlier, I can't remember which currency it was, but it was like over a very long period of time, commercials shifted when they saw like a huge like monthly pattern turn. So, and probably the best way for you to look at this is on a log scale. So it looks something like that. There. So theoretically, according to heads and shoulders, is this we should go top of the head down to the neckline and then clone that off of the neckline down to here. So there's your ultimate objective. Has that been hit? Are we close to that? Interesting too, Benkoff check, Wyckoff check. Interesting how that number's there as well. So from the futures perspective, we're awfully close to some sort of bottom. I've always made the argument this whole correction that this was actually our bottoming window. Right in here. Can we get one more spike down into that level? Early 2023 to mark the bottom. I like that thinking. Does the commitments and traders report really help us at all here to see that? I don't know. I don't know whether I have enough data here, and if I have like consistency in the data print to help me see that. I think the jury's still out. Sorry. Be interesting to look at like the micro BTC. Does this help at all? No, we don't get anything there. And Ethereum, do we get any information here? Now, this might be an interesting study to look at. This is try and keep this conversation focused on the commitments to traders reports. We just sort of study each camp first, get sort of an idea what the heck the message is. Are there enough people that would want to hedge with Ethereum units? Keep in mind that the Mr. Vitalik's supercomputer is, in smart contracts, it is the basis for a lot of what you see going on, NFTs, all that kind of stuff, right? So is there enough of a commercial industry? I don't think so. But can we use the data? I mean, let's let the information itself validate this. I don't like the fact that we made a peak here. That's right in here. And then we've just been working our way down with this commercials, and price itself has been going down. That's the exact opposite of what should happen if these are actually hedgers. Also, too, remember with the Bitcoin and the Ethereum contracts, these are cash settled, not physical delivery. So that in itself might actually be a huge influencing factor of this. They're just used as speculative instruments, not actually hedging vehicles. So I want to keep that in mind. But anyway, we had a bottom here, we had a rally, and the commercials took the positions off. So again, exact opposite of what we would expect to happen if this was real commercial hedging. Then chop down, then move up. So interesting, we do have, for whatever it's worth, a divergence here. So something, price is either weaker than what institutional participation would you believe, or vice versa. Institutions have the wrong position on. I don't know which one it is. I think as it stands right now, absolute best, I would say top end of the range. And actually this makes a lot of sense because notice there is the big structural fail level. So this is sort of like your line in the sand. Whoops. If I'm a bull, then I will be back up through this level here, about $2,000 on Ethereum. That I feel pretty comfortable that that's probably sort of your I'm a bull, I'm a bear. And now notice that they're almost equal size as well. Obviously, because this is a log chart, prices are going to be slightly different, but hopefully if you just eyeball this, you see that basically that's about the same size, eh? So it's kind of like glass is half full, glass is half empty. So which side of the equation are you on? Does the commitments to traders report actually help us at all here? I don't think so. Notice that yes, this made higher highs, but also too, notice that this made lower lows. And you could do it off of that there, and you could also do it off of that there. So if anything, technical analysis wise, we call this a megaphone. There's a guy that I used to work with, 8 years ago, and he would call this a dirty bottom, not a clean bottom at all. Also, too, we did put in this very wide W here, right? So we did have this trend line actually fire. And that was not only rejected, it'd be interesting now to see how this acts against this trend line. If we can W out, then that might be usable information. If we M out and lose it, that also might be usable information. So I'm not really getting anything really usable. One thing I will say is that, we did check the mean, check the mean, check the mean, went to an extreme, Probably odds are we need to check the mean here. So not getting much out of the commercials there. That just looks like a big mess. If we pop on over to large specs, let's see what the heck they're doing. Do we get any help here? Conversely, this, and it is interesting to see how these are moving in almost opposites. So there is something going on here. I'm just too stupid to figure out what the hell it is. I might argue something like that. Maybe that's a tough one. And do you go off of that structure there? Interesting how that failed there, or do you go off of that one there? Subjective, definitely. If we go off of just this structure here, then that structure there, then we just rallied up into an inflection point and we failed. Is this usable information? I haven't got a clue. It's just more, hey, we're on Christmas break. I did a good job with Liam yesterday, so I don't feel stressed about Liam. I got to talk to my stepmother, who is probably the only family member that I really care about. And she's feeling pretty good. So, yeah, why don't we just come and spend some time with the public and site members and talk charts. If I was going to look for some sort of pivot, I do like, maybe a nice stab down into this area here. There. So we have there. So something along those lines. Fortunately, and I thing is, I don't even know if is that bullish? Is it bearish? I don't know. You can see this moved up here from here, this peak here to there. Price went down while that moved up. But from here to here, and keep in mind that happened right there. It's kind of sideways. I don't think that this data is going to help us make a trade decision one way or the other. What I'd like to see, and I thought this was interesting, like I was trading our Canadian account, and I actually went and bought some of this right at about $1,000. I mean, I was pretty lucky I got that filled. And had I been doing absolutely nothing with the accounts, then I would have just left this on the books and just let it work. We're winding up the Canadian company, so we just operate off of the U.S. partnership. So we're kind of just selling out everything there. So I took that position off. But, really, I don't mind the idea, especially big, fat, round numbers. I don't mind the idea of actually being long this. I don't think the commitments of traders data helps, but I really don't mind being long from our good old 78.6 kind of thing. Right, there's 78.6, so basically where we are right now. I don't really mind being long anywhere sort of down in here and just simply saying, you know what, I'm going to risk to a close below that level there. I really don't mind that. So that's a pretty small risk window. Obviously, no guarantees from the management. We don't really have a W to work off of here yet. If anything, what this is this is like our shark setup. And actually, I did one of these off of a cryptocurrency today, or maybe it was a couple of days ago. But there's the original bottom, right? So we go down, then up, then down, test the low, then turn back up and go through that high. So that technically is a W. There's 78.6, checking that original market structure, and I just throw my bid in off that 78.6 and I got filled. And over the past week or two, things have just been going back and forth, just driving you crazy, but not really doing anything. So I'm certainly not calling bull here, but I would not fault you if you stepped in. I mean, this is the way traders trade. Are you a trader? If you're not, then be a little old lady and you're just going to go nibble away and you don't take too much risk. And, I like the Ethereum story, blah, blah, blah. And you're just nibbling over time. If you are a trader, then you have to identify when we come down into bottoms of ranges And you have to start asking, how can I get in off of this? And now we have a line in the sand. That low there is 994, and it makes sense because basically all this is a game against the big fat round number, $1,000. So is there any way I can sneak my way in on the long side, just coming in, taking a risk against these lows? And if the lows fail, then you just walk away. No big deal. And, this is your risk window, whatever that yellow box is. And that, my friends, is a trader's life. It is just that simple. And most people will try and grandize, try and, well, a trader's life's all hookers below. And, if you're really, really good at this, oh, it's easy money, Lambos and all that shit. When in reality, a trader's life is just really a question of, can you force yourself to come in and take that risk? If you can, they say that if we had a W here, I'd say absolutely. Well, actually, technically we do, right? Because if I go candle, yeah. Oh, actually, it's a dirty bottom. It's one of Jerome's dirty bottoms. But if this W here fires, then I would say 60, 70% of the chance time, which is a pretty good number, 60, 70%, that's not bad. You got a pretty good shot of a zipping back up top. Right now, I would put it probably at like, I don't know, 15% maybe, somewhere in that area. So that, how do we say that? Yeah, I think I would probably say 30, 40%. 30, 40% is probably, we're going to turn here, hold this, and back up we go. And then if we can, start to see things like indicators starting to put in divergence. We don't have that here off of this commitments to traders report. And really, this is not even about commitments to traders. So I'll just leave it at that. Point here is if the W comes in, then the statistical odds of this trade working go way up. So let's all keep our fingers crossed that that W does come in. Okay, so it's 1 o'clock here on the West Coast. I thought maybe I could get through a bunch of these markets, but as you can see, I love talking. I love the sound of my own voice. I love to tell you stories and stuff. I think probably would just leave it at the currencies for today. And if you want, Chris, which would be kind of cool if you wanted to put in chapter references. We went methodically through one currency after another, after another, after another. Unfortunately, I didn't really see any trades actually setting up. The closest one that I saw was keep an eye on this Mexican peso. I kind of like the idea that if we do rally back up top here and fill in these gaps and then start to show signs of failure, you can see that's a weekly price chart gap up there. So that's a pretty darn important level. And considering the commitments to traders reports, there are the large institutions. You can see that they're starting to get out of their longs. And conversely, there are the commercials, and they're starting to get out of their shorts, meaning that they think the market should come down. If I was going to be hunting a trade using this commitments to traders report data, and knowing levels and stuff like that, I think that that's probably your value added content for the day. Doesn't necessarily mean that it trades here just yet. Like I said, what I would prefer to see is some bearish structure up in here. If anything, what would be best is at this point, like if you were actually hunting the trade setup, I might say something like I'd probably pop on over here 6M. Let's go to our daily chart. Which is this guy up here, and come up to this 6M. All right, there is the chart. So what we want, remember we said commitments to traders report showing a huge shift. In fact, we have an outside downside engulfing bar. That's probably what a lot of the traders saw. We had that interesting original range up top there. So if anything, I really like that level right there. Remember, there's a bit of a price gap right there. We do our reload zones up top. So we know, Chris, of course, is going to be sitting up there at his favorite fib, 78.6, somewhere up in this area. So now what you'd want to see to really set the trade up nice and juicy is, give me a nice pullback, then maybe a push up, something like that. And on this event here that we go to new highs, you see that all your indicators actually start topping out and making lower highs, something like that. That would be the ideal scenario. So you can even see, based on Willie, we're just now turning up. This is going to take some time to play out. So there's no hurry here. If anything, like I said, if anything, what I'd almost want to do is see if we can do this maybe once a month. Maybe on the weekends, what we'll do is we'll just do one sort of section. The currencies is a big one because there's a heck of a lot of them. We also threw in the Bitcoin. We could probably next week do like the financials and the stock indexes as one block. Then the next week we do the what they call the hard commodities, the energies and the metals, and then maybe the next following week we do the softs, so that kind of thing. So USDZAR, that's South African rand, isn't it? Is that what that is? Is that the ZAR? I don't know what the hell is the ZAR. USDZAR. South African rand, yeah. So what you need to do is go back and watch the video about an hour and a half ago. And you hear I did lots and lots of rants on the South African rand. Interesting, nice little engulfing bar. But anyway, we were looking at the commitments of traders. So. Okay, what do you think, Chris? Was that of any value at all? I just felt like, I had that wonderful experience with Liam yesterday. I don't want to talk myself into the ground, and I don't want to bore the crap out of you guys. So I'm just thinking, that was a good couple of hours. So what do you think? Was there any value in all that?
I think there was exceptional value and slightly valiant effort in trying to get through every single commodity in one shot.
Forget it.
Good try. Good try. Yeah, yeah.
At least we had the dream, right? Anyway.
PMA.
Yeah, exactly. And the good part about it is, and I've said this before, we want to get Chris all set up there in Madeira. It's Madeira, Madonna.
Majorca. You're
Majorca.
kind of close. Yeah. I think you're in a different country, but yeah.
Anyway, get them all set up there, and then he'll be like, okay, Brian, I'm going to the beach. I'll just turn the video on. I'll come back in a couple hours. You'll still be talking away, right? So hopefully we can do this in the winter time too, right? And of course, he's going to be reporting in from paradise. All right. So now I can go play video games. I don't know. Chat with TRI site people online. Thank you. Because we kind of left you guys out of the broiler chicken show yesterday. If anything, Chris and I will be working in the next week or two on the raffle for the upcoming level 1 school term. Our current level 1 instructor did have a bit of a challenging fall, so we're going real slow with him. Empathy here, especially in Benner cycle troughs, is definitely the better part of valor. So I'm not really in a huge hurry here, but at the same time too, I would like for you guys all in the public to have an opportunity to win that contest. And we have one gentleman who runs our secret options formula club room, and he's just an absolute whiz technical analyst now, and he won our first contest. So you never know, you might find that you win that contest and it literally changes your life forever. I mean, I would suggest all of you just to do the education program anyway. And I think our price point's nice and cheap, but as an added treat for you guys, PMA, good karma, all that. Like I said, we should have a raffle. And if anything, Chris and I need to figure out what's the best way to get that message out to you guys so you can all participate. So we've got that to look forward to. We'll try in this coming week, this Sunday. I don't know whether Chris is going to be around. I think it's New Year's Eve, isn't it? Yeah, I beg your pardon. So are you going to be around Saturday? Oh yeah, no, it is. Sunday is New Year's Day. Are you going to be around New Year's Day, Chris, or are you out again?
New Year's Day, I should be around, yeah.
Okay, so we'll try and at least just get you guys to the point where we do have all the instructions for how to participate in the raffle all set up and good to go. And look forward to that. And maybe we'll do another one of these marathon commitments to traders videos, because I kind of like it. It's kind of a fun way to do a review of this stuff that needs to be done anyway on a weekly basis. So. Okay, let's leave it at that. Have yourselves a great day. Hope you guys got some value out of all this. PMA for the win. Thank you very much, Chris, for your assistance. All the best, everybody. The only thing left for Brian to say is bye for now.